pause the video right now and read that prompt so you can understand why I'm doing this. I'm essentially going to build an algorithm for weekly options, and I understand the risk of weekly options. They're super duper sketch. I have a crypto strategy that's working pretty well for me in the quant app. I put it in here. It's not like a push play strategy, but it's trading based off liquidations. You can read that prompt, pause the video. Okay, so all right, here's your Greeks breakdown. I essentially want to do a masterclass as I'm a crypto trader, dude, and like I pointed out a couple weeks ago, every crypto trader is pivoting to stocks. Okay, that's stupid, dude. Don't pivot all the way to stocks. I'm only pivoting to stocks with crypto stocks. That's it, because there's correlation. More leverage is more smoke, dude. Okay, I'm gonna get smoked quicker. So this is probably gonna be a failure, but most of the things I do fail and I find the gold within them. So if I have a strategy that's working on the quant app and I can just trade this, these liquidations, I see where everybody's getting liquidated. If there's correlation between Coinbase and MSTR and these Bitcoin in general, then if it works here, then it might work on options. Options are super duper sketch. Don't trade them. I'm gonna do a tiny size by hand on Robinhood, see if there is a way to get that huge leverage with controlled risk. If you buy an option, well, you have controlled risk, whatever you paid for it. So that's nice. That's a nice thing. I can't get liquidated. I could lose 100K here. I could get on tilt, get full size and lose 100K. But with options, technically you could too, but you'd have to buy all those options. So you have to get really tilted. It's always the danger in my mind is the emotion, the human tilt. That being said, if I'm going to dive into this, I need to understand Greeks a little better. I understand them a little bit. Really the only one, actually, I don't understand them. I look at IV and I know one of these is time decay. Seeing them over and over again, it's just dumb, boring finance stuff. You just have to remember. I feel like if I'm going to go ahead and build, the vision is to build a zero DTE or weekly DTE bot that is buying out the monies at a discount and see if they can fill. And most of the time they won't fill. And when they do fill, maybe there'll be big lotto ticket wins. A lot of losses, a few big wins. That's kind of where my brain's at. I feel like that's easy to build opposed to like trying to make my own math models right at the start. I know there's so much edge you can have in algorithmic trading if you mess with options, but I can't just go build some algo right away. I guess I could work with AI at this point, so maybe I could. But I need to conceptually get over there and figure out how to put the orders in and all that stuff. I already know how to put the orders in with interactive brokers, but you know what I'm saying? Like a small, simple strategy first. So a simple strategy be like, okay, if the option is $1, well, let me go ahead and I see there's a trigger in whatever my system I have, this liquidation system. I see there's a trigger. Okay, boom. So there's a trigger and it's $1. Let me go ahead and see if I can get a stinky bid on it. Let me buy 80 cents or something like that, So I don't know. We'll see. There are liquidations coming through, dude, and I need to buy a little bit. I'm gonna go ahead and just take a little bit of this, just so I could have a little action, dude. Let's see when the schedule is. 8, 6, 6. Nah, I'm gonna wait. I'm gonna wait. I've got good buys here. When these guys get liquidated. And this is the kind of strategy I'm trying to implement into interactive brokers and options. Maybe again, it might just fail entirely before I even get there. But let's learn about the Greeks a little bit more. Here's your Greek breakdown. How much the option price moves per $1 move in the underlying. A 30-cent delta call gains 30 cents. So if the delta, okay, so delta is $1. I'm actually going to write this down on a piece of paper. Because if you write it, you'll remember it. If you type it, you fucking forget that bitch. All right, I got my paper here. And now I'm going to go ahead and get a pen. My pen here. Delta. Let's understand it and try to make it something I can write. How much the option price moves per $1 in the underlying. A 30-cent delta call gains 30 cents if the stock goes up $1. Think of it as your directional exposure. Out the money options have low delta. So 0.1 to 0.3. At the money, 0.5. In the money approaches 1. For your liquidation reversals, you're buying low delta options, hoping they rip towards 1. Okay, so is how much they move per dollar of stock move. Out the money equals lower 0.1 to 0.3. At the money equals mid, like 0.5. And then in the money equals approaching 1.0. Okay, so approaching 1.0. Okay. Beautiful. So let's go ahead and keep looking through this gamma. I understand delta now. That one's not too hard. So delta is it shows how much it'll move for a $1 move. Okay, so gamma, the rate delta changes. This is your friend on weeklies if you're right. When price moves your direction, gamma accelerates your delta. So your gains compound. But it works against you too. Wrong direction and delta collapses fast. Gamma is highest on ATM options at the money and explodes near expiration. This is why weeklies are volatile as fuck. Okay, you did a really good job of showing the numbers with delta. Gamma, I didn't see any examples of that. I needed to understand this better. Give me like the actual numbers it would show and all that good stuff. Same with theta and vega. I do have shorts on MicroStrategy and Coin right now. I just bought naked puts, and I'm trying to buy a little bit more, but I want to wait till I get entered automatically. So I think that's the play for now. Is just my signal is gonna be my quant app entering, and it's gonna miss signals, but until then I'll just play around with it, learn a bit. Okay, Delta, you buy MSTR 500 call when stock is at 480. The delta is 0.25. Stock moves $5. Option gains $5 times 0.25. So 125 on a standard 100 share contract. If the delta was 50, same move would be 250. Deep in the money with 85 delta. Let me go look at these deltas right now. I think that's going to be helpful as well. The Greeks delta. So if it's a negative, delta, does that mean that it's going down per dollar? Or but it'll be negative on a put. I'm looking at my put right now. Does that mean it's going to go down $1? Yeah, how does that work when it shows negative? And then teach me again with these actual Greeks right now on MSTR. Negative 0.148 delta, and it's changing rapidly. Regular 0.0178 gamma, negative 0.354 theta, 0.041 vega, and negative 0.0029 rho.
Don't even think about it, bro. Just keep going. Let them find out who it was. They gonna be on you.
Okay, so great. So your MSTR 500 call. So let's go ahead and define delta real quick, or gamma. Wait. Yeah, gamma. So I'm working on gamma right now. Gamma. The rate data delta changes. Gamma accelerates your delta. Gamma accelerates delta. Okay, gamma accelerates delta. Or collapses it fast. Or collapses it. Gamma example here. Same MSTR call. Delta starts at 0.25 and gamma is 0.05. Stock moves 480 to 485. Your delta was 0.25, so you gained 1.25. But now your delta's increased to 30. Next move. Okay. And gamma bumps delta again to 0.35. Okay. Damn, I missed the entry, dude. I missed the entry. That's okay, though. It's okay. I got an entry on options now. That's cool. That's actually pretty cool, dude. That's pretty cool. So, I could connect the Quant app eventually to stocks. I don't think I need to right now. I think I would just go full. I would stay fully automated over there. Just build some algos. I'll show you guys in the private lives and all that good stuff. If this looks good. How are you? 200K in loss right now. Bad position, bro. I'm in a wait. Sorry. What'd you say, Michael? I'm in a 200K loss. How? Oh. Bad position, bro. The dickhead, bro. You don't even fucking know me. Never seen you before. Fuck off. These motherfucking finance incels are disgusting. They're just little trolls waiting to say something negative to me. So I must be negative too. I'll smoke you when I see you. Bitch. 200K loss. What? I do what I love though. I'm just here to compete. I'm just here to compete. I can get nasty though. Okay, so gamma bumps it up, so that's cool. Gamma seems interesting. Okay, so theta example. Let's go read what theta is first. Theta is time decay. Oh, this is the one. The silent killer. Weeklies bleed theta constantly, especially the last 3 days or 3 to 4 days. An out the money weekly might lose 10 to 20% of its value per day just sitting there. Damn. You're fighting the clock. Your liquidation signals need to hit faster or theta eats your position alive. This is why everyone gets smoked if they hold too long. So let's go to theta here. Theta, time decay. I do use XG boost, but what do you use it for? Like, yeah. XG boost, but like for what? So that's the thing. Like just to run my whole life to predict a bunch of prices and make me $1 billion. Is that what you're asking? I just don't understand. You can buy so theta. You can buy out the money weekly calls for $200, $200 per contract. The theta is negative 40. That means every day you hold, you lose 40 cents per contract. Damn. So example, negative 0.40 equals lose 40 cents per contract per day. Yo, dollar, how are you? 777. Yeah, it's really just comes down to what's the machine learning is just feature engineering. So what features are you inputting? What are you trying to predict? XGBoost can absolutely be useful in the process. So that means every single day you hold is down 40 cents from just time passing. By Friday afternoon, if the stock hasn't moved, your 200 will be likely worth 20. Goddamn. So Vega, let's go figure out what Vega means. Okay. Sensitivity to IV. IV spikes your option gains value. If IV spikes your option gains value even without price movement. If IV crushes, like after earnings, you get wrecked. For crypto correlated plays, IV tends to be elevated anyway, which means you're paying premium for that volatility. Ignore row. Let me tell you something, cousin. Let me tell you something. I'm all ears, baby. I'm all ears. Okay, so there's more liquidations coming through. I am not in a position, but I am itching. I got to buy at 8-1. 781. I'm about to fill this bitch. This is about to fill. About to fill for sure. But my short thesis is running out, really, because of the that guy being liquidated. But I don't think all these motherfuckers are gonna get away with these free longs like this. So probably be a liquidation event at some point. So we'll see. Let's keep learning about these options though. So Vega is sensitivity to implied volatility. If IV spikes, your option gains value even without price movement. If IV crushes, you get wrecked. For crypto correlated plays, IV tends to be elevated anyway. Okay, let's go look at the example for Vega. So same option is priced $2. Vega is 10 cents. Current IV is 50 cents. News drop, IV spikes from 50 to 10. Okay. So
He had a great quote that said, "Rest at the end, not in the middle." And that's something I always live by. You know, I'm not going to rest. I'm going to keep on pushing now. There are a lot of answers that I don't have, even questions that I don't have. But I'm just going to keep going. I'm just going to keep going, and I'll figure these things out as I go, right? And you just continue to build that way. So I try to live by that all the time.
Rest at the end.
Rest at the end.
Okay, sick. Let's go ahead and look at the real data now. So this is real data on MSTR right now. Well, you got it. Negative delta on a put means it gains value when the stock goes down. Okay. Your MSTR put breakdown, delta is negative 1.48. Okay, stock drops $1, puts gains at 0.148. So $14.80 per contract. If the stock drops $1. Stock rises $1. So let's look at these again. So the delta is now negative 0.14. So the stock drops $1, put gains 14 cents, but it's per contract, so it's $14 per contract. The stock rises $1, it loses $14. This is a pretty out the money put, not super sensitive. Okay, gamma here. So gamma 0.178. Let's go look at my note sheet, figure out what that means here by looking at our notes. Gamma is the rate delta changes. When goes your way, gamma accelerates delta, or it collapses it. So if our delta right now, or sorry, gamma is 0.016, that 0.016 is how much the delta changes the gamma changes the delta. If MSTR drops $1, so the gamma is 0.0178 now, so it changes throughout the day, it looks like. If MSTR drops $1, delta shifts from negative 0.014 to 0.166. Why? Because that's that. Okay, that's the gamma added to it. If it drops $1, delta becomes another $1, delta becomes 0.184. Your put accelerates as it moves in your favor. Gamma is low right now because you're out the money. It'll spike as you get closer to at the money. Okay, theta. Okay, let's figure out. So theta here is time decay. Time decay. This one's the one that's important in my book. So theta right now on this option is 35 cents. Damn, dude. So the option's going to lose 35 cents per day. Holy moly. So you're losing $35 per contract per day just sitting there. That's your clock ticking. If MSTR doesn't drop soon, theta eats this position. Interesting. Okay, Vega. Okay, let's look at my note sheet. Sensitivity to IV. Vega equals 0.1. News drops, IV options. Can't read my handwriting. Oh, option gains from 10 times 0.1 equals 100 per contract. So theta, depending on the theta, which the theta is at this moment, is now negative 0.35. No, sorry, Vega. We're on Vega. These words, dude, they're intimidating. 0.0403 is what it's at now. So if IV jumps 10 points, say 60 to 70, you gain 10 times 0.41. If IV drops 10 points, you lose 41. Okay, row, ignore. Bottom line, you're bleeding $35 a day. You need MSTR to drop and drop soon. If it moves your way, gamma will start compounding. All right, so you kind of know the strategy I'm looking at here, right? So I use my quant app in order to take over people's liquidations in crypto with the thought process of, I really don't know if the price is going up or down ever. And I don't think anybody does. So if you're using 40x leverage in crypto to trade, the only way to stay alive is to take other people's thoughts, their biases of long or short, and wait until they lose all their money and then take those thoughts, right? And that's what you're doing with liquidations because they are smart people. They truly believe the price is going up or down. Okay, well, we're they're smart people, but we are dumb people, and we know that we don't know if prices are going up or down. So let's bet on that smart person, but buy or sell, I don't care, when they get liquidated, because we're taking their smart thoughts from the past, waiting until they lost all of their money and just entering better. You see what I'm saying? So that's kind of the strategy I built into my quant app. And I'm trying to replicate here with options, but instead of buying on 40x leverage on Hyperliquid per se, I could use just a controlled risk option strategy where I buy these out the monies or even in the monies. This is where I just, you just taught me about the Greeks. I don't know much. Any options I've done, I've gotten smoked on because it's just gambling. But if I take an algorithmic approach to this, it could be very fucking interesting because it limits your downside, number one, and the upside on these weeklies is crazy. But yeah, let's go ahead and brainstorm 3 of your absolute best ideas of how we can get an edge here, how we would use the Greeks if we need the Greeks. I picked this idea because I don't really need the Greeks. I can just trade that liquidation strategy and maybe look at Theta or a couple of the Greeks, but IV, of course. Anyways, I want you to give me your 5 absolute best ideas of bots that we can build around this strategy using options and dailies. More leverage, the better, because that's how everybody trades. And I'm just trying to solve the problems that everybody actually has in trading. Okay, let's see. Let's see what happens. See what we can cook here. Am I doing this? Am I doing this right? Am I doing this right? This is how you use Claude? Never used it before. Okay, I think this is going to enter, dude. I think this is going to enter. And let's see if, is that a good entry? Wait, no, they're moving their shit. But I've already got the order in, so I'm going to let it ride. It's executing right now, actually. Speaking of the devil. Speaking of the devil, dude. Jesus. Speaking of the motherfucking devil, dude. You speak of the devil, he gonna hear. He gonna hear. He gonna hear, dude. He gonna hear. You say the devil's name, he gonna hear. Oh, you want to trade 40x? Okay, the devil's here. Let's go, Moon. So you really want to play, dude? Let's get it. Okay. See what happens. See what happens. Do I get this other entry as well? Maybe I get smoked. Maybe I get smoked. I don't know. I'm just here trying to play the game, dude. That's all I'm trying to do. Just try to play the game. Just trying to compete, dude. Just trying to compete. And I know you guys are smarter than me, so I'm taking your positions. Hold up, hold up, hold up. God damn, bro. God damn. I do that a lot, dude. Okay, I got out of the position immediately. I had a stop loss set to 0.01% just for overnight peace, but I can just get back in. I can just get back in, don't worry. So I had a little baboon moment there, and that's okay. I got a better entry up here anyways. Let me just take that position just to be fair. You know, my shit triggered and then it closed me because I had the stop loss at negative or 0.1%. Just a human error. And this is part of the reason I don't think you can trade by hand, gang. Cancel. And now I'm trying to buy, bro. Jesus, thank God I have that. Did you see that? I tried to put a buy in. Like everybody else is doing. Am I going to trade like everybody else? No way, dude. No way. Stop it. I'm not trading like everybody else. I can't. Everybody loses. If everybody loses, then why the fuck am I going to do that? Stop it, dude. Stop it. I'm getting back into the position that I accidentally closed. The risk closed it. So that's fire, though. It's fire. Shit works. Shit works. I'm back in that position. Okay. Small position. Great. Why? Because I'm trying to live forever, dude. Drag me. Cool. Small positions. Yada, yada. Okay. Let's get it. Let's see who's to gym first. Let's get who gets to gym first. Let's get it. That's all. Okay. So you can see here. That did trigger, which was nice. I now have my risk control set up. Sometimes what I'll do is overnight, if I see that like I'm in a winning position, because I'm scared and I'm a human emotional trader, I'll change my stop loss to be like 0.5% because I already taken profits. And that's one way that you can make sure to leave the casino up. You know, I take 50, 60% profits on a trade, and then I just let the rest ride. But in reality, I should take 100% profits because that shit rarely works out.
Organized night.
Yes, our slogan must be learn, baby, learn
So that we can earn, baby, earn. All right, so I have this scheduled here, but I see he's lifted his position, our liquidation price. I'm gonna just get a little bit more size here, just a little bit. So add just a little bit. I don't want to go crazy here. No, I'm gonna wait. I'm gonna wait. But this is, as a human, this is the same emotions, right? As trying to enter a trade. I am entering. This is me hand entering pretty much. I'm in. I'm in. No, see, I want to get in because I feel like we're at the top of the range, but I've got these liquidation entries here. So I'm just gonna wait on that. And if I want to do anything by hand, it will be adding to my MSTR Coinbase short. Don't fucking trade with me, dude. If you do that, if you trade with my ideas right now, you are absolutely getting smoked. I promise you that. I'm testing a brand new idea. You can see the thought process behind the idea, and I'm probably gonna lose all of my money. So just be careful, dude. This is not financial advice. I'm not a financial advisor. Come on, dude. I'm just stepping on the gas with you. I'm trying to take your cash. Literally, bro. Come on. You know that we're competing. And I'm just going to keep competing every single day. There's no financial advice around here. There's nothing, dude. Nothing. There's me coding, bro. Me coding and yapping. So, all right, here's 5 ideas thinking through this like a quant. So, liquidation cascade. So, out the money weekly entry, simple translation. Your CryptoBot detects a big long liquidation cascade on BTC. You immediately buy out the money puts on MSTR, or calls if it's a short squeeze liquidation. Interesting. Okay, so this is the exact opposite of what I was thinking, and the exact opposite of how I've been trading it. But that's the beautiful thing about trading. You can literally take a buy or a sell. You can go short or long, whatever, dude. Your CryptoBot detects a big long liquidation, and then it's trading with that, looking for a squeeze or a collapse. The edge, you're not predicting direction, you're reacting to force sellers. By the time retail sees the red candle, you're already positioned. Defined risk equals premium paid. Okay. If the reversal rips within 24 or 48 hours, gamma explodes your position. If not, you lose the premium clean. I like this actually. So it would just be on a smaller liquidation. I'm waiting for people to get liquidated like 1 million, 2 million. But what about like at smaller position sizes? I like that. Good idea. So let's go here and just make a list of ideas. And if you guys want this, let me know in the chat. Let me know in the comments, dude. Interaction Brokers is a different platform, So let's go ahead and say betting on liquidation cascades and short squeezes with weekly options. That's it. That's the note. Okay, that's number 1. I'm gonna build that for sure. I just don't know what order. Okay, what else? Liquidation straddle, direction agnostic. When you see liquidation stacking on both sides, longs and shorts getting wiped out in the same session, it means volatility is about to explode, but direction is chaos. You're not betting direction, you're betting on movement. One leg dies, the other prints. The edge liquidation data tells you when volatility is underpriced. I like this is solid, but I feel like this is I'm gonna start as a degen, just like naked, naked, naked. All right, I want to do 5 of your absolute best ideas, but coming from, what I said above, but we want to start with just easy things. Like, okay, for example, buying a sell and buying a call and a put, doing like a straddle is like phase 2, right? It's super easy to put in an order for an option on interactive brokers at any price. I can do that, no problem. I want to start there. What I'm trying to say is I want to start with the degen, just naked options. So your 5 best ideas based on what I said, naked. Okay, so theta aware entry windows. Your liquidation signals fire, but it's Thursday afternoon. Don't touch it. Theta will eat you alive before the reversal plays out. Rule: only enter weekly options Monday through Wednesday. If a signal fires Thursday or Friday, either skip it or use next week's expiry. There we go. This is pure edge preservation. Same signal, but you're not bleeding. I like that. Only enter Monday through Wednesday to avoid theta.